you just raise your hand. I think there's a button that says raise your hand in there, somewhere around there. Okay, I know a lot of you guys are using cell phones, so somewhere around there there's a button that says raise your hand. You just click on that button and I will unmute your mic, and once I've unmuted your mic, you will be able to speak and ask whatever question you want to ask, and then I'll basically answer it from there, and we sort of like have a conversation around it. Or second option is to click on the chat bar, right? I'm not sure if it's a bar or it's a round circle, something along those lines. And if we have that, and you can see that, just click on it and just type whatever question you have. I'll repeat the question again, and yeah, just proceed to answer it from there. Okay, just for one of those two options. We are always keeping everyone on mute simply because there's a lot of background noises coming in from everyone who's actually attending the session, and it makes it impossible for us to hear anything, especially when it comes to the recorded version of the PDF of the session. Okay, so just make sure that you understand the rules. Okay, and make sure that you just raise your hand or you just type in the chat. Okay. So I think previous session we went through the orders, right? Now we're going through. Okay, let me just get a sip of water. I'm just dying over here. I actually just hit the gym now. Haven't even. Yeah. Pending orders. We went through the pending orders, right? The limit order. Okay, so the sell limit as well as the buy limit as stop entry as well, which is your buy stop as well as your sell stop. All right, so I think the previous video that I actually did, and I did compile everything into a series of videos on the YouTube channel and sent through the links for the beginners as well as the intermediate, so you can just go on through to the beginner stuff if you missed any of the videos that pertain to the beginners material. So if you missed any of the stuff that we previously did in the past, I think it's 6 or 7 pages, then you can just simply head through there to, yeah, sort of like catch up. Okay, we spoke a lot regarding the importance of what a stop loss does, and I mean, stop loss is one of the, well, to me, it's the most important order, simply because it actually protects your equity. And there needs to be a way in which you actually place a stop loss. I mean, we're not going to get too deep into that right now, but you don't place a stop loss based on the dollars that you're comfortable losing, for example. It needs to be an area where you it's least likely that your stop loss will get tagged, because sometimes you throw in a small stop loss, you throw in one standard contract, for example, on a small account, let's say $1,000 account, and you throw in a standard contract, and what basically happens from there is you have to have a very tight stop loss then. So you might have a 20 pips stop loss, because now if you get stopped out on 20 pips, you can't take any more than $200 risk, which is already like 20% of the $1,000 account. So $1,000 account is, I mean, it's pretty small, but um, yeah, it just needs to be something that you work around. And I will give you guys, I think we've gone through that already with the more advanced guys, but stop loss shouldn't be based on the amount that you're willing to lose per se, but it should be in an area where it's least likely to get hit. Okay, you don't want a scenario where your stop loss gets hit and triggered continuously, right? Each and every single time, and the market goes in your direction in any case. So it doesn't help if you write in the direction about the direction of the market if you're not making money when the market goes in your intended direction. So just a bit of a side note. Okay, I know we'll look into that a bit further down the line, but just wanted to get that out there. Okay, we've done the trailing stop as well, which is also an important stop order, and which if done or used appropriately, can maximize your profits, and as well, if used incorrectly, will minimize the profits that you make. Because if your trailing stop is too tight, then the market will always sort of like have this jerking motion where it moves back, right? It might move 100 pips in up, for example, but it's going to move, even if it's 10 pips back, right, or 5 pips. So if your trading stop is too tight, you're going to get your trading stop tagged, right? You're going to get stopped out. You might make 50 pips, but there might have been a potential 300 pip if you had a much wider trading stop. So that's also something to be fully aware of and sort of like work around as well. So the different types of analysis that are used in most commonly in the market. I mean, there's other ones. I mean, there's some weird types of analysis that people actually employ to sort of like decipher the markets, but we'll just start with the most common one, which is technical analysis. That is just the study of charts, right? Looking at charts, right? MT4 typically, drawing trend lines, candlestick patterns, all of that stuff. That is basically what the technical analysis will entail. Okay. And if you're looking at fundamental analysis, right? So fundamental analysis is typically using studying the economy, right? Factors outside the MT4 platform, which are like interest rates, okay? Um, how well the economy is doing, political events, the GDP, and things like, let's say, I don't know, even droughts. Let's say there's a impending drought somewhere that will actually influence certain um, crops, let's say. So if you're looking at, I don't know, oranges, right? You're looking to trade oranges, or you're looking to trade coffee or cocoa, then when it comes to a drought in a major um, provider or supplier of that particular crop, then you're going to see some increase in the price of that particular crop, obviously, because now there's a drought, therefore price should spike. So fundamental analysis just refers to factors outside the MT4 platform, and which will just include different factors: unemployment, interest rates, the GDP, how well generally that economy. This is with regards to currencies, how well the economy is doing basically as a whole. And thirdly, on one of the most commonly used ones is sentiment analysis, right? So sentiment analysis is focuses basically on people's emotions and whims. All right. So let's say you feel very strongly about, you proudly South African, right? And you feel like you want to be a buyer of the currency naturally because you're sort of like a martyr, and that would be sentimental analysis rather, because you're not using any technical analysis, you're not using any fundamental reasoning to buy the South African rand. You just based off the way you feel about your country and stuff like that. That is basically sentimental analysis. Okay. um, there's different types of other ones. Okay. I mean, I think people dream and buy the markets. I don't know where that falls in. I know of astrological analysis where people like look at stars, how the stars align, and all that other stuff, and then place trades based off that. But I mean, that's a very lengthy topic that we can get into sometime when we're not that pressed for time. Okay, now we're gonna go into the MT4 platform. All right, that's gonna be in our module 4, right? And what we're doing is, because the platform that we use is provided to us for free, right? The MT4 platform itself is free. Okay, so it's the most commonly used platform for retail traders to actually trade, right? And you'll find a lot of different tools that you can use to actually analyze the markets and for you to actually place trades. So I'll show you guys how to download it, how to place trades on it, whether it be on your cell phone or your laptop. And yeah, I'll just give different examples on how you can sort of like customize your MT4 charts and stuff like that. I know a lot of guys like to have it customized to the way that they like it to be, and I don't think there's a problem with that. But I just prefer like basic stuff. I can do black and white, I can do red and green. Doesn't really matter to me. But if it appeals to you, then definitely you can use that. Okay, now the charts are graphical representations of price movement. Okay, as we'll see, um, this is the main tool that we're actually going to be using, and it helps us to identify potential directional movements in the price, right? So the price behaves, as I've always said, in a series of patterns. Now the patterns are repetitive, yeah, but they don't come in the same sequence, which it means that you might have a pattern that is, you have 3 days where the market goes up, and then on the fourth day it's going to drop, right? It's not always going to come in that particular order. You might get 3 pushes, or 2 days rather, of push to the upside, and the market stalls, and then you get another push to the upside, and then the market drops. So it might be a variation, but generally you have very identifiable patterns that will repeat themselves when it comes to the market. Okay, now as traders, we basically study these charts in an effort to sort of like make a decision about whether to buy or to sell the currency, right? And if it fails, then let's say we're looking to buy the USD ZAR, right? So when we're saying we're buying the USD ZAR, we're buying the USD, right, which is the United States dollar, and we're selling the South African rand. Okay, because we buy, if we're buying, then we're buying the base and then we're selling the quote, and therefore we're anticipating the rise of the United States dollar in comparison to the South African rand. Okay. Now there are 3 types of charts that we can actually use in the markets, in the MT4 platform rather, and namely the line chart, the bar chart, as well as you can use candlestick charts, right? So bit of a thin line there, but we can just call it candlestick chart. So I'll show you guys different examples of how those work, and the most commonly used one obviously will be candlestick charts. And if you don't know already why, then good thing you popped into this session. Okay, now line charts draw a very simple line connecting the closing prices of any currency given over a period of time. So let's just drop down. I think I had an example here. Okay, I'll need to open up the second document. Right, let's just continue here, and then I'll show you guys those examples that I actually have there. Right, now the line chart draws a simple line, as I said, the closing prices of any currency over a period of time. Right, now the price may connect the daily closes of any currency over, let's say, 6-month period. So it's just going to be a simple, very simple looking line when you're actually looking at it. Okay, but it's going to be prices. Let's say this is 14 rand and this is 15 rand. Okay, so with the price slowly moving up, right, it's that from that 14 to that 15 to that 16, so the price will oscillate up and down, and this is just representative of the closing price of each and every single time period. So if you're on the 1 hour time frame, okay, so if you're on the 1 hour time frame, so if you click on H1 on your MT4 platform, then the distance or the close will occur every single hour. So at 4 o'clock, a new candle will, or the dot or the close will be printed, okay, and then it'll start moving. You'll see it when I show you guys the example. And then if it closes higher, right, at 4 o'clock, or at 5 o'clock rather, boom, you're gonna see that the line just moved up. Then it's just gonna keep doing this, right, when you actually zoom into it. But when you zoom out of it, it's just gonna be a bit smoother. Okay, you'll see that on the example when we get into it. Okay, and the bar chart is a bit more complex, as they're not only showing the closing prices. Yeah. So it not only shows the closing prices, um, given over a period of time. So let's say, for example, we're on the H1 time frame, then we're gonna have something that looks like this, right? So this is gonna occur all in 1 hour. You have the open, boom. You have the high of the candle. You have the low as well as the close. Okay, let me just move this. Yeah, right. So this is where the price will open. Okay, so this is where the price will open, boom, right? And the high of the candle. So let's say within that hour, the highest price was 14 Rand and the lowest price was 13 Rand. So the price opened up at, let's say 13.90. The price, this is 13.90, pops up to 14 Rand, drops to 13 Rand and closes at 13 Rand 10 cents. Boom. Right, so that's on the left is our open, and on the close is on the right, right? So our close is on the right, and the highest point is shown by the shadow, and our lowest point is shown by that shadow. And then immediately as this one closes, there's going to be another open, boom. And if the market pushes up a bit and then pushes down again, boom, you might see that. And this will be repeated over and over again. So when this one closes, another one will open, boom. And if the market drops down first, you'll see a bit of a wick or shadow to the downside, and you might get a big push on the upside, and that's how it's going to look. Right, I'll show you guys examples of that as well, so no need to worry. And then last but certainly not least, you have candlestick charts. Okay, they show the exact same information as the bar chart, but in a way that is much easier to read and understand. So it actually has a body like this, like so. Okay, right, let me use this rather. Okay, so you have a body and you have what's called the wicks on either end. Okay, wicks or shadows. So here the body is solid. All right, so you can see this is a solid body. It's blue, and here we have the wick or the pin. Right, some people call it the wick, some call it the pin, some call it the shadow or the spike. Doesn't really matter, but I just call it the pin. So if you just want to use the call it the way I call it, just so you don't get yourself confused, just call it the pin. So it doesn't really make any difference. And depending on the color of the actual candlestick and how you've customized your chart, let's say it is red. Let's just do a red to avoid. Okay, let's just go over this with a red. Right, so a red typically will mean that a candle opened here, right? So this is the open price. Boom, there's the open price, and that is the highest point. This is the lowest point that the market reached during that hour, and this is where the market closed after that hour. So this, let's say this is that 13 Rand 90 example. This is 14 Rand. Boom, this is 13 Rand, and then this is 13 Rand 10 cent, and that is the actual close. Okay. All right, so let's check out an example of how it will look like on the chart. Boom, this is what it looks like exactly. And as you can see, if we zoom in just a bit there. Okay, if we try and zoom in here, you have, didn't mean to do that. Yeah, let's just use this. Okay, so you see there is a close on the downside, right? The candlestick that is black, let's just imagine that it's red, meaning it's when it's down, when the candle is down, closes down, then it's going to be red, and when it closes up, it's going to be green. So let's imagine the white candles are green and the black candles are red. Use our imagination. So when this closes, it drops down. You can see the market close drop down. So that when this one closes here, this one immediately opens right there. Okay, it might drop, it might rise higher, but essentially this is where it closed. And as soon as that one closed, there's another one that opened, might jump up and down, do some backflips, right? Do some break dancing, but when it closes, boom, naturally another one will actually open up as soon as the previous one has closed. So that is how the sequence of candlestick patterns occurs, right? You can see this is on the weekly chart on the NZP JPY, so there's no trading during the weekend, which is why sometimes you might see these sort of gaps develop. Don't let that confuse you. Generally, when you're looking at markets, especially on the lower time frames, you're just going to get a sequence of close, right, at a certain price point, and then the market opens exactly or near to where the previous one actually closed. All right, now candlestick patterns. We just finished doing that with the advanced guys, like advanced candlestick patterns. And the reason we look at those is because they show us how the market has been behaving, right? And the market is simply a representation of buyers as well as sellers. That's the simplest way that we can interpret what a candlestick is, or how it paints. It's pushed up when people are buying, right? And it pushed down where there's an influx of sellers, right? When there's a lot of shorting going on, then the market will move down. And if there's an influx of buyers, then the market will naturally move higher. Okay, supply and demand. Now, there's some very basic patterns that we'll take a look at here, right? And some advanced patterns that we'll take a look at a much later stage. But it's very important to be able to identify these types of candlestick patterns, right? Even if it's just one or two candlestick patterns, and simply focus your time and energy on that. Because if you try and be a master of every single pattern that's out there and try to trade every single one, I mean, you will become exhausted and, yeah, definitely broke. But if you isolate your attention to a very few and limited basic candlestick patterns, right? Even if it's advanced candlestick patterns, as long as you're very familiar with them and you are really good at actually trading. Okay. All right. So first one is bearish railroad track. Now, bearish railroad track is primarily when you see an aggressive push to the upside, which obviously is a representative of an influx of buyers, right? So people going long on people, traders, robots, whatever the case may be, going long and on at a particular price, right, will push the market higher. So you might get an aggressive candle to the downside. Okay, and then immediately after that, when this one closes, you get this candle, all right, also known as an engulfing, which is sort of like contrary to what you may have thought initially, because if you're looking at the market pushing higher aggressively so as well, you might be inclined to think that it will continue to make those strides on the upside, right? But the very next candle just pulls all of that momentum back and then sends it in the opposite direction, and that's what's called a bearish railroad track, right? An extended piece like this, if you have a bit more on the downside like that, where this particular candlestick is a bit bigger than this one, then that's a real engulfing. It's called a bearish engulfing. But if they're equal, sort of like this, then you just call it a railroad track, right? Doesn't recently matter if what you call it, but it's gonna look like one of the two. Okay. And if you can be able to identify that, it will give you a heads up in terms of when the market is ready to reverse. So you couple that with a few elements that we go over with the advanced guys, and that's how you sort of like build your high probability trade setups, because that's basically what trading is. Okay. All right. I do see that we have about just a few minutes left, so I'll just try and squeeze in as much as I can. But if you have at any moment have any questions, just raise your hand or type in the chat. Okay, I think the last piece we can take a look at is the bearish railroad track. Okay, you can call it the bearish railroad track. You can call it rather bullish, right? Bearish, remember, is down and bullish is up. So the bearish engulfing usually is indicative of a reversal to the downside, right? After a momentum or a one directional swing to the upside. Okay, and a bullish railroad track or a bullish engulfing will have the exact same types of candles, but usually obviously at the end of a downward trend, right? So you have a trend to the downside or an extended move to the downside, and you might have an aggressive candle like this, boom, and then all of a sudden you have okay, let me do this. We'll run out of time. Okay, the very next candle is a green candle headed upwards after an aggressive candle to the downside, which is green. Okay, but this red with this candle going upwards, okay, this candle going upwards is much bigger than this previous one here, which shows that there was more buying here. There was more buying power here than there was selling power here. Okay, so like I said, it's still a trend change type of setup, right? So those candlestick patterns are very important because they can indicate to us when a trend is about to change, especially, right? Especially you don't just look at these candles and be like, okay, that's the end all be all. You're just looking at candlesticks because they need to go in the right part of the cycle, right? It needs to be in line with a major support structure, right? It needs to be in line with a bounce off the moving average, for example, needs to be on a big figure. So there needs to be a few more things that come together in order for us to be like, okay, that looks decent. That looks like something that I can then participate in. Okay. All right, guys. Any questions? Okay. Guess we have probably 2 or 3 minutes left in this session. So if you guys don't have any questions whatsoever, I'll just go over a few things before we end off tonight's session. Right, like I said, this has been the beginner session. So what you need to do is go through the section that we've just gone through. If you missed parts of the webinar today, you'll be able to get the recording as soon as I upload it and send through the link on the Telegram channel. Make sure that you go on through to the Telegram channel, click on the pinned message, and it is going to take you straight through to the PDFs that you need to download, right? There's a message there and PDFs are there. Just go through the PDFs as a beginner. Just click on the beginner's ebook for now, module 1 to 4, and just focus on module 1 to 4 for now. And there's also 3 powerful strategies for the more advanced guys. But if you're still a beginner, just focus on that one for now. Okay. Make sure you go through to the channel, the YouTube channel, where you can look. I've taken the liberty of making a playlist for all the beginners, right? For all the guys who are sort of like starting out, just make sure that you watch the playlist, which is, I think it's, yeah, beginners playlist. That's all it is. Make sure that you bring your attention to that, watch it repeatedly, and go through the PDFs, take notes on that, and then, yeah, if you have any questions, right, if you have any questions, there's also a link, or just going through to the WhatsApp number and ask whatever questions that you might have there. Okay. So if there aren't any questions here, I will end off the session right now. Right, the recording will be available probably in the next 30 minutes or so. So if you missed part of the session, you will be able to rewatch that. Okay. So Happy New Year's, guys. Forgot about that. Yeah, I think it would explain why some of the guys aren't here today. Okay, people busy nursing hangovers and stuff. But totally understand. And yeah, guys, I trust you guys enjoy the rest of the evening. I will see you guys tomorrow at 7 p.m. sharp. Right, remember 7 p.m. to about 7:30, 7:45, depending on how much time, how much work we actually need to get done. So thank you guys for coming through and enjoy the rest of the evening. Cheers.